Hello and welcome. You tune into Buy Now Sell Now with me, Ankita Saxena, and with me is Shrishti Sharma. In the next 1 hour, we'll be taking all your questions related to stock-specific queries and getting them answered by our experts. So you can keep sending in your questions. The number is flashing on top of your screen, and we'll keep getting them answered. But first up, let's take stock of how the market is shaping up. Well, after a bit of a consolidation that we saw coming in on the first day of January, we do see the markets, run up now. In fact, we are hovering around the highest point of the day. Nifty is trading with gains of 0.4%, 111-point gains is coming on the Nifty. Highest point of the day is where we are perched at, and we have managed to cross the 26,250 levels as well on the Nifty. So a good recovery that we're seeing right now. Nifty Bank also perched at the highest point of the day. In fact, Nifty Bank is above the 60,000 mark right now, trading with gains of 300 points or 0.5% up in the trading session. In fact, the entire Nifty basket, bank basket, is being buoyed by the sentiment across the bank operational updates that have been trickling in. Good set of numbers that we are seeing on a lot of names there. Besides that, let's look at the broader markets. Let's pull up mid-cap index. That is trading up 0.6%, and even the small caps is trading up 0.5%. So even the broader market is adding a lot of leg to this rally today. Let's talk about the sectors then. We have Nifty Realty, that's the top sectoral gainer today with gains of 1.3%. Godrej Properties, Oberoi, DLF, Anantraj. We have Soba, they're all trading upwards of 1.5%. Nifty Energy and Nifty Auto is also doing very well. Now remember, even for Nifty Auto, the auto sales data has come out, and a lot of players have done well. Hero Moto, we have TVS Motors that have beaten the estimates, and on the back of that, they are also trading up with gains of 2+%. On the back foot is only the FMCG pack. FMCG that was also on the losing foot yesterday. The consumption basket is trading with cuts of 1%. We have Radico Khaitan, we have United Breweries, Varun Beverages, Godrej GCPL that is trading with cuts of more than 0.5%. So FMCG is on the back foot today. But besides that, we also have a couple of gainers like Coal India, NTPC, Hindalco, Geofinance that are doing well in trade. Those are the top Nifty gainers. And advanced decline ratio is clearly tilted in the favor of advances today. So net-net, the market breadth looks very positive. A good day of recovery that is coming in after yesterday, Shrishti.
Absolutely, and decent gains all across the board. But with this, let's get started with all your stock-related queries. Viewers, you can write to us, tell us your name, the stock that you have already invested in or wish to stay and invest afresh, and also tell us the time horizon. But do not forget to mention your name as well as your location, and we'll try to take as many queries as possible. But with this, let's move on. And before I take your queries, let me welcome two of our very special guests onto the show who will be guiding all of us. We have Mr. Chi Chokalingam joining us, as well as Kunal Bothra is here with us live in the studios to guide you technically. A very good morning, gentlemen, and thank you so much for your time. And Mr. Chokalingam, let me come to you for the first query that I have. And this one is coming in from Rajan from Bangalore. And he wants an advice on Grow. Holding 2,000 shares at a price of 150 rupees, do you believe that it's going to be a multi-bagger? Should he hold on to this particular counter? Mr. Chokalingam, good morning to you and Happy New Year wishes as well.
Thank you. Wish you Happy New Year to you as well as your team members. Now coming to the Guru stock, I may be absolutely wrong, but I don't think it can ever become a multi-bagger in the next 1 to 3 year or 5 year. Because if you look at the business model, it has a lot of competition, and I firmly believe that the competition in this space will keep rising. Because duplicating this business model, you only need to buy a digital asset and plug in and start playing it out. And margin pressure will be there. Generally, in this business, it is there for several years, and that trend will continue. And therefore, if at all, it can, it can give maximum around 10-15% from current level next 1 year. But otherwise, I am not overly bullish on this stock.
All right, so that's the word coming in on Grow. But let's move on to the next question that's coming in. This is Vishal who's sending in a question. He says he's holding L&T. He's holding 250 shares for the past 10 years, and today it has hit 52-week high. Should he sell or hold? The average price that he's bought it at is 851. Kunal, let me come to you. L&T, he's been holding it for the last 10 years, and congratulations to him for this stellar gains that he's sitting on. What should he do now? Should he really book his profits, or should he completely sell out?
I think he should enjoy his gains. It's been New Year for him, so I think it's been a fantastic I think congratulations. We've been holding on to the stock from 800-ish odd levels to now 4,000 plus. It still looks very strong at current juncture. So L&T is what we generally say that if you're bullish on India, then you have to be bullish on L&T. So I think in that sense, we would expect that the stock would continue to outperform. I don't think you should tinker with your holdings on L&T and then switch on to some other high beta pocket, high beta name, because when you're looking at this with a potential of another 5 to 10 years, I would be of the belief that the stock would continue to do exceptionally well and will, would probably give you a much more higher CAGR returns than what it has seen in the last 5 to 10 years. So I would be of the bullish view on L&T and would continue to suggest a hold.
All right, that's a hold coming in on L&T. Let's watch out for that. But the next up is we have a live caller with us, and we have Mr. Venkat Rao joining to us from Visakhapatnam. Mr. Venkat Rao, very good morning. Please go on and ask your query. We do have Mr. Chokalingam and Kunal with us.
Very, very much happy to use Shishri Sharma ji and Kunal ji and Chokalingam ji. Chokalingam garu, wish you happy new year. Wish you all the best. I am great fan of Kunal and Chokalingam. I am from Venkatrao from Vietnam. I am holding Poonawalla Fincorp 15 numbers at the rate 569 rupees. And second, HAL 300 numbers at 4981. I am in loss. Kindly tell me at what price I am average out.
All right, Mr. Venkat Rao, New Year wishes to you and your whole family as well. But let me take it up from Kunal. 1,500 shares of Poonawalla, 569 is the buy price. And even for HAL, not giving him returns. At what price he should average out?
See, I think, the buy price for both of these stocks are on the higher side. And my assumption is that you've just bought it, very recently, because Poonawalla Fincorp was almost at 570, a few months back. And HAL was at 4,900, 5,000-ish kind of a mark just about 2-3 months back. I would believe that both these stocks have come back towards a very attractive territory at current levels, where you can look to average. Poonawalla Fincorp is sub the 500 mark, HAL at 4,400 levels. I would be bullish on both of these names from a long term. I think at current levels is where I would suggest. It may not be a perfect bottom for both of these stocks, but then net, I think these are good levels where you can look to average so that you can bring your cost price lower. Even if you get it, say, closer to 520, 525 for Poonawalla Fincorp as an average price and closer to 45, 4600 for HAL, that would be a very good zone where you may expect the stock to come back towards in the next 1 to 3 months.
All right, so that's the word coming in on HAL. But let's move on and Poonawalla Fincorp, and let's move on to the next question then. This is specifically for Mr. This is specifically for you, Mr. Chokalingam. This is Krish who's writing in. He says he holds Cummins, 20 shares at a buying price of 4,325. He wants to know your long-term view on Cummins India.
I believe it is fairly priced. I would, prefer Larsen and Toubro in the engineering space. It has got a multiple triggers. It has got a 1/3 of profit coming from IT, so it will act as a defensive. And then it is getting into, in a very aggressive manner, semiconductor, electronics manufacturing, data center, semiconductors, so many new verticals. I am very confident that L&T will scale up all the new businesses, including nuclear power, and unlock a lot of value in the medium to long term. And it will outperform Cummins. That's my strong conviction. So I prefer L&T to Cummins.
All right, so that's the take coming in on Cummins as well as L&T. But let me move on and take the next query. And this query is coming in on HFCL. And Kunal, let me take it from you, because a viewer named Guru from Chennai has bought 100 shares of HFCL at a price of 75 rupees. Can he go ahead and average at this price point?
See, it's a stock which has been in the thick of news flow in the last 1 week, 10 days. And that's why you've seen sudden pickup of volume action. 75 is your buy price. I will suggest a hold as of now, because it looks like that the stock is trying to form a bottom. But I would sense that the stock may take at least another 2 to 3 weeks to try and show stronger signs of bottoming out, because what happens is after an initial round of price volatility where the volume jumps up, the stock shows at least 2-3 weeks of consolidation at the lower end of the price range. So my assumption is that this is not a short-term investment. If that's the case, you can continue to hold on.
All right, so that's the word on HFCL on the charts. But now we have a live caller who's joining in. Sanjeev is joining us now. Hi, good morning, Sanjeev, and Happy New Year to you. Tell us, what's your question?
Good morning, Sanjeev from Bangalore. Happy New Year to all of you. I'd like to invest around 4 lakhs in stocks for 1 to 3 years. So can you suggest some good options for long-term growth?
Mr. Chokalingam, this is a tough one. He wants to invest 4 lakhs. He wants your advice on a couple of names, 2 to 3 stocks perhaps, where he can invest his money.
Yeah, being a research analyst, I will place 5 to 6 stocks. The investor can take his own call on investment advice. I given a equity research strategy of at least 30 to 50% in the large cap Sensex and Nifty stocks in my research. So I would recommend stocks like L&T, the Reliance, and Apollo Hospital. These are the 3 stocks in Nifty. I believe in 26, probably they should beat the index. In the small and mid cap stocks, I like Karnataka Bank, ISGEC, Scient Limited, Nesco, Bombay Burma. Among these, I personally hold Karnataka Bank, Nesco, and Bombay Burma. These are the high conviction stocks in our research coverage.
All right, so those are the high conviction ideas coming in from Mr. Chokalingam. But with this, viewers, it's time now to slip into a very short break. Don't go anywhere. We'll be right back with more, and we will be taking more of your stock-related queries on the other side. That I have is coming in from Pratik from Udaipur. He recently added PVR Inox at an average price of 998 rupees, around 100 shares. Mr. Chokalingam wanted to understand what's your long-term view over here, because yes, the stock has been quite range bound of late, but would you suggest adding more at current levels or wait for a dip?
At best, I would give only hold call for short to medium term. My long term view is negative because of the structural changes happening in the industry. I am of the firm view that the movie industry, but based on theaters, is going to have a lot of pressures. The competition is increasing manifold from OTT, and competition for eyeball is increasing through social media. So I have a belief that long term would be very negative for this business. But short to medium term, there can be some tactical recovery. If such thing happens, I would give a sell call, but otherwise I would give a hold recommendation for short to medium term.
All right, so that's the view coming in on PVR Inox. Hold is the call that's coming in. But let's move on to the next question then. This is coming from Amit Sood. He writes that he is holding Finolex pipes and Gale. He's holding Finolex for about 25 years. Since its IPO is what he says. And Gale, he's been holding since 2022 at a buying price of 125. He wants to know if he should hold on to it or should he now sell out. Kunal, let me come to you for this one. Finolex, he's been holding for a very long time. And of course, the second question is on Gale. What's your view?
See, I think you could continue to hold on to both of these names. I think both of these stocks have gone through their individual phases of price correction in the last 10-12 months for 2025. And then these stocks have shown signs of bottom formations on the charts. We've seen what these stocks can do in terms of price trend when we look at this from the 2020 lows for these stocks. So I think in that sense, it's a good time where you may continue to hold on. If possible, then I would believe that even for Gale at current levels, you can consider adding a few more quantity at current zone, because my sense is that once the stock shows signs of bottom formations, there could be a very strong possibility that in the next 1 to 2 years, you might see at least another 15 to 20% upside for the stock.
All right, so that's the take coming in on Gale. Let's watch out for this particular counter. But the next query that I have is coming in on Adani Green. And Mr. Chokalingam, one of our viewers, he actually didn't mention his name, but let's take his query. He's holding 250 shares of Adani Green at an average price of 1150 rupees. What to do with this one? Is that a sell or hold?
Short to medium term, it may not give return, but certainly long term potential is there. So with the long-term investment horizon, I would give a hold recommendation on Adani Green.
So that's the view that's coming in on Adani Green. But let's move on to a live caller who's now joining us, P. Rajesh Khanna, who's joining us from Hyderabad. Hi, good afternoon, Rajesh. Tell us, what's your question?
Yeah, good afternoon. Actually, I'm holding the Central Bank of India 500 numbers at the rate of 43. Can I hold or can I?
Mr. Chokalingam, let me come to you. What's your time horizon though, Rajesh?
I'm holding last 1 year. I'm holding.
Okay, last 1 year he's holding, but no, how long do you want to hold? What's your like? How long do you? Is it a long
So
term for the long term or?
I want to make a short term.
Okay, so in the shorter term, Kunal, let me come to you. What are the levels to watch out for? He's bought it at a buying price of 43 rupees. He's clearly sitting at a loss here. What should be his port of call now?
See, I think the best strategy ideally would have been that you would have probably shifted to some other formidable PSU banking name, and I think there was very plentiful of opportunities in the last 4 to 5 months. Now, Central Bank of India is trying to make a comeback on the short-term charts. It's trading above the 200-day moving average, so there could be a possibility that if the PSU banking stocks, say in the next 1 to 3 months, when they move up higher, assuming if they move up higher by another 8 to 10%, you might see central bank also coming back towards your cost price closer to 40 to 43 mark. So as of now, I would suggest that you can hold on to the stock with the next 1 to 3 months possibility of the stock coming back to your cost price. But if in case you are looking at deploying additional capital, then I would believe that trading into the other PSU banking names, Canara Bank, Bank of India, SBI, even at current levels, I think that's a far more better bet which you can deploy, assuming if you can deploy additional capital.
All right, so that's the take coming in on the banking counters. But with this, let's move on and let's get back to the WhatsApp queries. Mr. Khanna, hope that Kunal's view helped answer all your queries. The next query that I have is also from a viewer from Hyderabad. His name is OSN Reddy. And Mr. Chokalingam, his query is actually on ITC. He holds 500 shares. He didn't mention the buy price. And we have a couple of more viewers and the one who have written to us specifically on ITC. Yes, of course, the stock is hammered as 349 is what we can see. Just yesterday morning, it was close to 400. What are your thoughts here, Mr. Chokalingam? For a viewer and investor like OSN Reddy, would you advise to add more at current levels? What to do with this current holding?
Yeah, tough question, but I have a firm view. I may be wrong. Investors can take their own decisions. Actually, we closed the call around 400 a few months back because when the GST rate cut happened across the board for many consumer goods, obviously the sin goods will attract more tax to compensate for tax revenues. That's what exactly happened. Now, going ahead, A, the paper segment is not doing well. B, its IT service subsidiary is also not posting any meaningful growth year-on-year basis in the profit. And C, one of the most profitable business segments, that is hotel, that has been demerged, and it holds a less than majority stake. So on a consolidated basis, that segment's contribution also has come down. Now, on top of this, the cigarette duty hike has come, and other FMCG segment also not scaling up its profits as we were expecting. So now going ahead, there is one more pressure point in the short term that but still hold some stake in the company that may also come to market. So there are a lot of pressure points in the short term. But to be fair to the stock, which has been hammered so badly in the last 2 days itself, I would give a hold call. If stock recovers 5 to 8%, then I would give a sell call and move on to any promising sector within the Sensex and Nifty rather than sticking to ITC.
All right, so that's the view on the fundamentals for ITC. But since there are too many viewer queries on ITC, let me take a quick chart check also from Kunal. Kunal, ITC now, a lot of brokerages have also cut their target price, on fears of a 20 to 30% hike in cigarette prices and the excise duty that's going to kick in. What is your view on ITC as far as the technicals are concerned?
See, after this kind of a news flow and the price damage, the yesterday's 5,000, or major delivery selling for the stock price, I would believe that today also you might have some, very similar kind of stance where there could be delivery based selling into the stock. I would believe that this could dent the stock price trend for the next 1 to 3 months unless there is any kind of a reversal in terms of the news flow. My belief is that potentially we may now be looking at the stock heading towards even 300 to 320 kind of a range in the next 1 to 3 months. So would not venture a buy or suggest a buy at current levels for ITC. Let the prices settle down. I think it will be a process of at least another 1 to 3 months where the stock price may get adjusted at lower levels, sub or close to the 300 mark is where you may want to consider buying the stock price, but not at current levels.
All right, so that's the take coming in on ITC, both fundamental as well as technical take coming in for you. But with this, fears, it's time now to slip into a very short break in this edition of Buy Now Sell Now 220, where we'll be right back. We get you answers for all your stock related queries, and let me get back to them because there are so many queries that have already trickling in. Just before going the break, we were discussing about ITC taking the fundamental as well as technical view. But let me shift focus to Eternal now, because day in and day out we do get to have a query on Eternal. And Mr. Chokalingam, please share your thoughts here, because Srijit from Kochi has been holding 4,000 shares of Eternal, but his buy price is way lower at 210 rupees. He can still hold for the next 1 to 2 years. What will be your advice?
Yeah, it's very difficult question for me because I may be wrong, but I don't have a very optimistic view on digital business, particularly the one Eternal is running, because it also deploys a lot of labor. It is one side it is digital based, on the other side it is a labor intensive business. So the marginal profitability of additional revenue is not great like any other digital business which are involved in, say, capital market. So having said that, second worry is that the competition will definitely increase in this space also in the medium to long term. But it is a part of Sensex and Nifty, so a lot of passive fund can come. So tactically, I would give a hold and hope for 5 to 10% return from here, short to medium term. But in long term, I am quite negative.
All right, so not a very positive view coming in on Eternal by Mr. Chokalingam. But let's move on to the next question then. This is Malti is writing from Bangalore. She says she's holding Maruti, bought it at a buying price of 900 rupees 15 years ago, and she wants to know if he can hold it for more time. And she's also holding 100 shares of Nalco that she had bought a year ago at 170. What could be the target price for the share? She wants Kunal to answer, and she says she's a big fan of yours, Kunal. Malti is writing about Maruti. She's been holding for the last 15 years, but now she wants to know if she can bought it at 900 rupees, so she's clearly sitting at really good gains. Should she book out now, or can she hold it for a longer period? And Nalco at 170.
Thank you so much for that, Malti, as well as congratulations. I think the fact that you've managed to hold on to stocks like Maruti from a long term indicates the kind of reward which you would, which you've earned into the stock. I sense for both of these names, Maruti as well as for Nalco, that you can continue to hold on because both of these stocks are now coming back to their prime. Compared to the last 3-5 years of the price patterns, Maruti specifically, the stock had been a huge underperformer in the entire auto pack. If you remember, there was a point in 2021-22 from there on where M&M was at 750 levels. The stock moved up to almost 4x kind of a price action zone. Maruti in that time span just about consolidated on the 10,000 to 11,000 range for that time span of 2-3 years. And now in just the last 3-4 months is where you've seen the price action pick up. So that I believe is a very strong case that you're looking at a potential at least 1 to 2 years of a major outperformance which could be there for Maruti. I would suggest that you can continue to ride on to the trend on the higher side. Even for Nalco, I think with this spectacular uptrend which you've seen across major commodity in terms of asset classes, and the stock price in the last 2-3 quarters indicates that you're looking at a major uptrend building up for Nalco on the long term. And I think purely as a long term investor, I would suggest that hold on to this for at least another 3 to 5 years.
All right, that's the take coming in on the metal counter as well as Maruti. But let me take the next query. And Mr. Chokalingam, this one is coming in on Nesco, wherein KS Rao from Guntur has been holding 70 shares at a price of 1,350 rupees. It's been just a couple of months that he has invested in it. But what's the long-term view here, as well as any targets to look forward to?
Yeah, I've been recommending this stock for nearly 14 years, and I continue to recommend it for next 5 to 10 years. And I also personally invested family money, company money in Nesco in line with the compliance. I want to disclose that because I have aggressive stance on it. I am overly bullish on the stock. Uh, the management quality is very fabulous. Balance sheet quality is also fabulous. Despite a continuous increase in the capex, the cash is also increasing. And if you look at the investor presentation uploaded by the company in August 2024, very interesting insight is there. The usage of the existing FSI is less than 20% of the total capacity. So now they are tripling the realty capacity. Even after tripling the capacity in the next 4 to 5 years, the available FSI capacity will be another 50% of the total capacity. So if you have a 5 to 10-year view, I think the potential is a phenomenal growth potential. And I may be absolutely wrong. Investors need to check on their own. I believe this is one of the best quality stocks, and it is for the next generation. That is what I have been believing and I have been recommending.
All right, so that's the word coming in on Nesco, but let's move on to the next counter. This is Jaikishan Rohira, who's writing from Mumbai. Jaikishan writes that he holds 22 shares of Balaji Mines at a buying price of 2,790 for a very long time. He wants to know what should he do. Kunal, 2,790 is where he bought it at. Clearly, he's sitting at a loss right now. What should he do, or what should be his strategy?
See, it doesn't make sense to hold on to the stock for a long period of time. The only advantage which you have, frankly, is that the stock has been beaten down significantly in the last 4 years from 5,200 levels as a major high for Balaji Mines towards 1,100 mark where the stock is trading right now. So there could be a possibility of a bounce back of sorts for the stock once the mid caps and the small caps make a comeback. That could take the stock back towards say 1,500 mark to 1,800 kind of a zone. But that's a territory which I would suggest that you can look to exit the stock and trade or invest in some other sectors like maybe the PSU banks, auto sector, etc. That would be a far more better strategy.
All right, so that's the take coming in on this particular counter. But let me take the next query then, and this one is coming in, Mr. Chokalingam, on delivery, wherein Chandrasekhar wants to know the current view on delivery. Is that a hold or sell? He didn't share his buy price, but yes, the stock in the past couple of, if we can say that in the past 1 year itself has shown very good moves. But what's your view here?
I am not optimistic on the stock. I do understand that it is a highly momentum driven. But if you look at the last 4 5 year performance, it is not able to grow profit substantially to justify the current valuation. But still, the oil price is down 25% from the peak, which is positive for this kind of logistic companies. So therefore, for short to medium term, I will give a hold recommendation. But definitely, the stock rises 10 15% from current level, it would be a good sell.
All right, so that's the word on delivery. Let's move on to the next question. Suresh is writing from Dubai. He's posting the question to Kunal. Kunal, he wants to know, he has Tejas Network. He's bought it at a buying price of 637 rupees. He holds 2,700 shares. He wants to know if he should be holding on to it or should he be exiting. He's sitting at a loss. What would be your recommendation, Kunal?
See, I think it's a huge underperforming stock. I think the better you've realized that the stock price is down more than 20% in your portfolio, even from a point when the stock at 600 odd levels, was trading at a major multi-year low for itself. But I think it's a good time where you can look to exit the stock price. You can make a better switch to some other sectors as well as stocks. If you're looking at say turnaround kind of picks, then something from the PSU banking names is where you can look to invest. You can look at private sector banking stocks, the formidable larger cap ones. That's a space which you can consider. But I think exiting Tejas Network, even at current levels, I think is a better strategy, and putting that money into some other better sector.
All right, so that's an exit call coming in on Tejas Networks. But the next query that I have is coming in from on Mankind Pharma. And Mr. Chokalingam, what's your view here? Because Mahalakshmi from Hyderabad has been holding 34 shares of Mankind Pharma. Buy price is 2,675 rupees, currently holding and having a loss of close to 18%. Would you advise to book a loss out here and rather invest that money into stock like Laurus Lab for the long term to make that recovery and to earn from that investment as well?
I believe both Mankind Laras are really good stock for long term. Both are, stretched in valuation in the short to medium term, but definitely good to hold for long term. Particularly the Mankind, it is trading above 8 times, or approximately 8 times EV to sales. I think short to medium term opportunities are already priced in. Similarly, even Laras Lab is, valuation is stretched in the short to medium term, but certainly one can hold for with investment horizon of more than 2 years.
All right, so that's the view on Laurus Labs. But let's move on to the next question. This one's coming from Anupam, who's writing from Bangalore. He has 3,500 shares of Union Bank at a bank price of 155. He wants to know if he can hold it for the next 1 year. What is your opinion? Kunal, let me come to you for Union Bank, because Union Bank has not done anything in the last 1 year. Should he be holding on to it for one more year?
I think you can continue to hold on to Union Bank. As I was pointing out earlier, that the PSU banking stocks are making a comeback, and there is a strong possibility that many of these stocks which have been underperformers, they could try and pick up pace or at least gain another 10 to 15% in the next six to 9 months. So in that anticipation, I'll suggest a hold on Union Bank.
All right, so that's a hold coming in on Union Bank. Let's move on to the next question that's coming in from. This one's coming from, they have not given their name actually, but they say they are a big fan of Kunal. Long-term investor wants to accumulate Som Distilleries. We usually don't take questions without a name, but Kunal, they say that they follow you very much and they are a big fan. So maybe you can answer this question quickly for this person. Long-term investment in, Som Distilleries is the stock. They have not given their buying price either, but what would be your tech check on Som?
Thank you so much for that. So on Som Distilleries specifically, I think at levels of 100, 109 where the stock is trading right now, it's come back towards a major multi-quarter support. I think the last time the stock was here was in 2023-24, where the stock had tested 110 and then moved on to 160, 170 mark. So in that sense, I would suggest a hold on Som Distilleries. But then there are far better stocks which are available in the Alcobev space. I think Radico, GM Breweries, United Spirits. These are the three names which have done reasonably well, and they continue to look strong. So if the entire sector moves up higher, there is a possibility that United Spirits, Radico as well as GM Breweries, they are the ones which can outperform.
All right, so that's the take coming in on this particular counter. But the next query, Mr. Chokalingam, that I have is coming in on Solar Industries, because of late on the back of the defense order wins, this counter has been in focus. But particularly a query coming in from Rima wants to know about the future outlook of Solar Industries, holding 58 shares, buy prices 14,150 rupees. She's sitting at a loss in this particular counter. What are your thoughts here, Mr. Chokalingam?
No, it's a track record of growth is very impressive, no doubt, but the valuation also stretched. So I would say that it's a long-term hold, but the short to medium term, I doubt whether it can run up fast, because the current price is fairly priced one in terms of the valuation for next 1-2 years. But beyond 2 years, probably this stock can create a significant return.
All right, that's the word coming in on Solar Industries. But with that, it's time for us to slip into a short break. Don't go anywhere. We'll continue answering your questions. You can keep sending them in. The number is flashing on top of the screens. Let's take a short break. Welcome back. You're tuned into Buy Now Sell Now. I'm Ankita Saxena, and with me is my co-anchor Shrishti Sharma, and we're getting all your questions answered. So let's get going and let's resume with all the queries that you've been sending us. This one's from PNS Murthy, who's writing from Vizag. He says that he holds Tata Steel and he wants to make a shift from Tata Steel to Tata Power. Mr. Chokalingam, let me come to you for this one. Interesting question. This entire metal basket has been doing very well. In fact, it has been, one of the best performing sectors of the year. Tata Steel has been doing well, but wants to make a shift to Tata Power. Would you recommend that?
Yes, I would give a sell call on Tata Steel. In fact, today media sources, if you see the senior executive himself acknowledge the fact that steel prices in India are 5-year low. On the other hand, Tata Power has been consistently building capacities in the green energy, renewable energy, and amazing build-up in the capacity. The stock also corrected from the peak quite significantly. So I prefer Tata Power to Tata Steel.
All right, so prefer Tata Power to Tata Steel. That's the call coming in from Mr. Chokalingam. But let me take the next query, and this one is coming in from Jay Krishnan from Kerala. And Kunal, can he go ahead and buy Hind Copper at current levels for the next 6 months?
See, it's a very tough one because the stock has run up exceedingly high, in the last 6 odd months or so. So I think at current levels, I would suggest this, just wait out. Maybe wait for at least another 10% to 15% correction. Let the stock come back towards 475-ish kind of a mark. That's where I would suggest a buy on Hindustan Copper.
All right, so that's the word coming in on Hindustan Copper. Let's move on to the next question. This is from Ramesh writing from Bangalore. He says he has Syngene. He's bought it at a buying price of 646. That's now trading around the 653, and he's sitting at a profit of 73 rupees. He's written that also. But he wants to know if he can hold it for the next 3 months. What's your view, Kunal, on Syngene? Can he make better profits than just 73 rupees?
Yeah, of course. I think you can make better profits on a stock like Syngene. The stock has had history of delivering excellent returns, especially at a point when the markets were trading in a very fine, fertile kind of a mode. At current levels, Syngene is a stock which I think has formed a near to medium term bottom around 600 mark. Even if you're looking at this as say the next 3-month plus kind of a time horizon, I would expect that the stock may head towards 700-ish kind of a zone or maybe 735. So that's a zone where you can consider booking profits.
All right, the next query that I have, let's now talk about that. And this one is coming in from Sudha. And Ms. Chokalingam, can you advise her on Graphite India as well as HEG? Because along with this metal rally, even these stocks have done very well. If you help us understand that, would you advise to make a fresh buy here? And should one buy at current levels, wait for some dips, any targets?
I would give hold for both at best, and I would wait for December quarterly results before taking a view, because historically the quarterly performance of both companies are extremely volatile. So the user industry also going through a difficult time, that is steel industry. So I would give a hold and analyze next quarterly result, then only take a firm view.
Okay, let's move on to the next question. This one's coming from C. Ganesh from Bangalore. He says he wants to invest 2 lakh rupees in CG Power for the next 1 year. Mr. Chokalingam, what would be your view on CG Power for the next 1 year?
I'm not sure about next 1 year, but 1 to 3 years, CG Power can create a very good return. Because right now at current price on the current earnings, it is stretched in valuation, but then it is coming from one of the most reputed industrial houses, that's Murugappa Group, known for turning around and growing whatever business they acquired in the last 3 decades. And also it is getting into semiconductor business. So I would give a buy call for long term. It's too good stock for 1 to 3 year investment horizon.
All right, that's the day coming in on CG Power. But Kunal, the next query that I have is coming in on Tata Motors passenger vehicle. A couple of days that the stock is showing a bit of a momentum. But Sunita from Bangalore wants to know, can she go ahead and average Tata Motors for long term at current market price, because her buy price is 567 rupees.
So I'm assuming that this is the adjusted price for Tata Motors PV. So I would suggest that yes, you can look to average out the stock at current levels, because the stock has been a huge underperformer, and my sense is that potentially in the next 3 to 6 months there could be a wave of strong catch up of underperformance from Tata Motors PV. The stock can try and come back to that 400, 450 kind of a range. So I think if you average out at current levels, you can probably drop down your cost price to 450-ish kind of a mark or slightly lower than that. So I think it's a good strategy where you can look to average out at current levels and hold on for the next 2 to 6 months with a potential target of 450 plus for Tata Motors PV.
All right, 450 plus target price, and can hold on to Tata Motors passenger vehicle because clearly it said it has been a net underperformer and there could be a catch-up rally. But let's move on to the next question that's coming in from Giri from Bangalore. He says that he holds Jio Finance at a buying price of 280 rupees average cost, and he wants to know if he should be holding on to it and what's the upside that is expected. He's not given his holding period, but Mr. Chokalingam, let me come to you for Jio Financials. What would be your call on Jio Finance for, say, for the next 1 year?
Yeah. In fact, we have a buy recommendation on Jio Finance with a target price of 390. It is one of the high conviction stocks in our research coverage. In the last quarter, that is from Q2 onwards, I believe many business verticals platforms have been set up successfully, and the lending business has shown good uptick in September quarter itself. And in terms of price to book value, it is trading at around 1.6 times, including the value of market value of the Reliance Industry shares it holds. So I have a very optimistic view. I believe this is one of the most impressive NBFC stocks for the next 1 to 3 years investment horizon.
That's the take coming in on Jio Financials. But Kunal, I'm coming to you for the next query. This one is coming in from RK Suhuja, and he wants a view on HEG as well as UPL. Would you recommend a buy at current levels? Mr. Chokalingam did give his take on HEG, but what are your thoughts? And what's your take on UPL? A good buy, any of these?
See, if you ask me, I'll strongly suggest a buy on both of these names because my sense is that both of these stocks are coming back into their own beta groove. So that by that I mean that these stocks erstwhile have been high beta names, and there was a period of lull price action for both of these stocks for the last, I think, 1.5 odd years or maybe more than that. Now with UPL back at 800 levels, HEG back at 600 plus mark, there is a sense that the price action is getting a little bit more stronger. Momentum is coming back, volumes chasing the price action move. That is a very strong signal that we are looking at a potential possibility where the medium to long term trend for these stocks are on the higher side. The only catch over here with both of these names is that they are very high beta, as I just mentioned. So you'll have to probably size your position very aptly because you don't want to be too much invested into the stocks, with the high beta space, because there could be a tendency where these stocks may go into a natural phase of correction and then make a comeback. So you can start buying at current levels for both of these names, and in case, say in the next 1-3 months, if there is a 10% kind of a correction for these stocks broadly from their recent highs, that's a territory where you can strongly consider to average further.
All right, so that's the word coming in on UPL. But before we move on, let's pull up the chart for Nifty Bank. Now, as you can see, we're just a few points shy from hitting a record high on Nifty Bank. 60,101 is where we are perched at. The all-time high of 60,118. We're very few points away. In fact, we're just 2 points away from that mark. Kunal, let me come to you for this. Nifty Bank going to hit another record high. Hopefully, it will today. From here on, do you see that rally to continue, and what are the next levels to watch out for?
Yeah, I think it's already hit the lifetime highs, if I'm not wrong. 60,114 was the high for the banking index, and we've crossed 60,118 for the bank Nifty. So I think in that sense, it's a very strong indication that this major index is making a comeback. Bank Nifty, and so much is dependent on the bank Nifty, and we've seen that in the last 6 months, or especially in the second half of 2025, where solely on the back of Bank Nifty outperforming, Bank Nifty moved up 10% from 54,000 levels thereabouts to 60,000, and that too on the back of solitary moves from the PSU banking names, which are the class outperformer. The good part is that many of the private sector banking stocks are making a comeback. So the health of the Bank Nifty also is improving, as well as the strength is still persisting for the Bank Nifty. This, I believe, is a very strong signal that we are looking at potential start of 2026 on a much more optimistic note from the banking index.
All right. Yes, of course, it's the start of the fresh new calendar year, and Nifty Bank hitting a record high for itself. And yes, of course, we did see the rally starting with, of course, the public sector banks, but now seems like even the private names are catching up the rally. But do note that some of these operational updates and financial updates for Q3 will be start trickling in the times ahead. So definitely that could be one of the other triggers for the banking index. But for now, it's the record record high level that we get to see on the banking index. But with this, let's quickly get back to all your stock related queries before we wrap. And the next query that I have, Kunal, let me come to you for this. This query is specifically for you, Mr. Chokalingam. So let me take it from you. This is from Praj Industries, wherein Praj Industries, Ramya from Hyderabad has been holding 60 shares. Price is 524 rupees, sitting at a loss of 37%. What's your view here?
Yeah. The problem with the Praj industry was that it went too high. Valuation comfort zone was breached, and that is one reason. And second reason, oil prices have corrected globally by about 25% from 52-week high. And this business gets affected whenever oil becomes cheap. But however, it's a part of excellent management, excellent track record. So therefore, what I would give is that hold for 2 to 3 years. I'm pretty confident that it may not go back to 800, but certainly above 500 target price is very much possible in 2 to 3 years. So therefore, I would give a long-term hold on Praj Industries.
Long-term hold call coming in on Praj Industries, but let's move on to the final question of the day. This is Prabjot, who's writing from Gurugram. He says he holds the Sagility 1,000 shares at a current price, at a bank price of 52 rupees. Wants to know what are the levels to watch out for. Kunal, Sagility, say we'll take 8 to 1 year time horizon. What are the levels that Sagility could hit?
We can consider holding on to the stock as of now. The recent high for the stock was around 57 to 58 range. I sense that if the mid caps and small caps they tend to make a comeback, say somewhere in 2026, then I would believe that names like Sagility can also try and cross back above its lifetime high levels of 57, 58 thereabouts. So it's a good territory where you can consider holding on to the stock as of now, with a near to medium target of 58 to 60 plus mark.
Right, that's the take coming in on Sagility India. But with this, viewers, we are completely timed out in this edition of Buy Now Sell Now. Thank you so much, Mr. Chokalingam, as well as Kunal, for helping our viewers with their stock-related queries. But with this, it's a goodbye from me and Ankita and the entire team who put the show together. Nifty Bank hitting a record high for itself. A lot of action in the market, and that is going to get carried forward in our next show, that is Markets at Noon.